Will there be a housing market crash in 2021? It's one of the most common questions that people have right now. After all, 2020 has been one of the most perplexing years in recent memory. We have record unemployment, an economy that has seen double-digit GDP declines, and we have millions of homeowners unable to pay their mortgages. Yet somehow the housing market is doing just fine. In fact, it's even going up in value in many places across the country. Is this just the quiet before the storm? Well, many people are predicting that unemployment is going to stay high, forbearances are going to come to an end, and eviction bans will expire. And all of this is going to cause an eviction and foreclosure disaster that will essentially kick off another 2008-style housing crisis. Well, that sounds fun. But is that really how it's going to go down? No matter if you're a home buyer, seller, or just thinking about maybe jumping into the real estate market, this is a very important topic to consider. Understanding the forces at play now could mean that you make better decisions that will help you to grow your wealth no matter what happens in 2021. So we're going to dive into this, first by talking about exactly what's keeping the real estate market propped up right now. And then we're going to look at some possible outcomes in 2021. And finally, I will give you my thoughts about what I think is most likely to happen. But before that, I just want to say videos like this take a ton of research to put together. So if you wouldn't mind clicking that like button, it'll help me to continue bringing you great videos just like this one. With that said, welcome to Gems. I'm Jay. Let's get into it.
Subscribe.
When the illness hit, people didn't want to buy homes. And those who would have been selling homes suddenly didn't want to sell. I mean, who wants to have people looking at their home and risk potentially getting sick? Look at this chart right here provided by Redfin's data center. You can see that there was an enormous dip in new listings hitting the market versus all recent years. This decline started in March and didn't get back to normal range until sometime in September. And by the way, the last thing the government, the Federal Reserve, or anybody else wants is another housing market meltdown. So policy was put into place that helped prevent everything from just flying right off a cliff. One action that happened is Congress passed the CARES Act, which, among other things, gave homeowners the ability to put their mortgages into forbearance for as long as 2 consecutive 180-day periods. This suspended the ability for homeowners to have their properties foreclosed on for non-payment while their homes are in the forbearance period. Also, the Federal Reserve slashed the federal funds rate to 0. This is significant because lower rates means it might cost you less to borrow money in the form of a mortgage. Now remember, home prices are driven by supply and demand. If supply goes down, then home prices go up. Or if demand goes up, then this will also drive up home prices. To simplify that, the less people trying to sell their home, the higher home prices we have. Conversely, the more people looking to buy a home, the higher home prices we have. At any rate, we find ourselves in a situation where both of these things have happened at the same time. A perfect storm, if you will, of the exact conditions needed to raise home prices. Limited supply and huge demand. With all of that said, I wanted to specifically talk about 5 things that are propping up the housing market throughout this situation in 2020. Number 1, pent up demand. Many people who were thinking about buying a home had to put their plans on hold. The market was already doing well going into 2020. And with so many putting their dream of buying a house on hold, pent up demand now has many folks in the market looking to buy. Look at this chart. You can see the area of pent up demand right about here. These are normally great summer months for home sales, but you can see there were way less sales than expected, followed by a period of more homes selling than expected. Maybe after staying home together for a while, folks thought, we gotta get a bigger house to get some space away from one another. Only kidding, sort of. Number 2, shortage of inventory. There have been less homes placed on the market due to fears of the illness and general uncertainty in the marketplace overall. Now, normally some homes go into foreclosure and end up hitting the market, but due to forbearance as an option, foreclosures are down 81% versus 2019. After all, why would anyone allow their home to be foreclosed on now that there's an option for forbearance? And also, as mentioned earlier, homes are selling like hotcakes right now. And the result of all of this can clearly be seen when looking at available inventory. Here you can see available inventory has dropped off to almost nothing. Very limited supply. Number 3, record-setting low interest rates. Every time we think mortgage rates can't go lower, they drop even more and set a new record. In fact, mortgage rates have set new record lows in 2020 12 times. When it costs you less to borrow money, you can buy a bigger and more expensive home. And folks who were previously priced out of the market could suddenly jump back in and start home shopping. And all of this adds up to more demand for houses. Number 4, qualified buyers. A lot of people think, well, how can anyone buy a home right now with so many people not working? Well, as it turns out, low-wage workers, mostly in the service industry, were disproportionately affected by the lockdowns. Low-wage workers, in a large part, are mostly renters, and they're not in the market for buying a home. Those who have resources to buy a home were much less affected by the illness, and in some cases even saw their wealth grow. This, combined with lower interest rates opening the door to new buyers who were previously priced out of the market, means there are a lot of folks who are qualified and now looking to purchase a home. As a point of reference here, and specifically to be sensitive to their situation, I think it's important to point out that some folks who would be qualified to buy a home were also impacted by the shutdowns, especially those who own a small business who were forced to close down. I get it, but nonetheless, the majority of the impact by individual person count has hit low-wage workers the hardest. Number 5. Building supplies are expensive. Prices of lumber and other building supplies have gone through the roof, no pun intended. This is making it so that builders have to raise the price of their new homes. And renovations are costing more, which is raising the price of existing homes. Okay, so the only question now is, where do we go from here? How does this all play out? Well, the pessimistic position would look at deflationary pressures as a result of this situation. For example, an estimated 3 million homes are in forbearance. If half of these homes are unable to arrange a plan to continue making their payments, we could end up with 1.5 million homes going into foreclosure. To compound to that is a looming eviction crisis. This is a situation that could cause landlords who are unable to collect rents from delinquent tenants to put their properties on the market. And with all this new inventory coming into the market, this would dramatically increase the supply of housing. Furthermore, if unemployment stays high, this could kick off a deflationary tailspin in the broader economy. This is because if folks don't have jobs, they are unable to pay for goods and services, which in turn will lead companies to implement cost-saving measures, such as reducing headcount, which would mean more folks who are unemployed, ultimately meaning less qualified buyers and less demand for housing. A downward spiral of doom. Okay, before we curl up in the fetal position and pray for a meteor to make all of our certain impending doom short and sweet, let me give you some thoughts about what I believe is going to happen. Now let me just remind you that all of this is just my opinion for entertainment purposes only. But with that said, you can relax. I don't think the housing market is going to implode in the near future, or at all in 2021. A lot of the same factors that are propping up the market right now are set to continue into the foreseeable future. For example, one of the main drivers of demand is low interest rates. And the feds have almost committed themselves to keeping the interest rates low for a long time to come. Nobody wants to see a repeat of 2008. And one of the best ways to avoid that is to use monetary policy to try and push inflation. And low interest rates are a key component of that strategy. Think about this. Right now, in most sectors of the economy, there are deflationary pressures. New money being pumped in by the central bank is allowing companies the liquidity they need to quickly pick up momentum in their supply chain. All of this while at the same time many customers of common goods and services are unemployed. For this reason, low rates must stay in place to hedge against deflation even as it's already inflating housing prices. However, as housing prices rise, the benefit of low interest rates are eroded away. This is because any money being saved by low interest rates is being offset by the increased price of housing. For this reason, we should see housing prices start to level out a bit. As far as the foreclosures, I don't think we will see those either. Firstly, it's in the interest of the banks to try and avoid having to foreclose on a borrower. Foreclosures are costly and usually come with a financial loss for the underwriting bank. It makes far more sense to try and work out a payment plan with the borrower, a payment plan which could be moving the missed payments to the back of the loan or even modifying the loan payments themselves. Furthermore, a hedge against the possibility of foreclosures is the fact that housing prices have been rising. How does this help, you ask? Well, if a borrower has the option of selling versus being foreclosed on, it makes far more sense for a borrower to simply sell the property and perhaps even walk away with some profit, as opposed to losing it all and walking away with ruined credit. As far as inventory goes, I think it will likely remain minimal, somewhat because housing will continue to sell quickly, but also with interest rates so low, many folks who are looking to raise some capital now have the option of a cash-out refinance, as opposed to simply selling their home. Also, I think eventually we will have another stimulus package passed, which will put more liquidity into the economy. Also, the Fed and the Treasury will continue to pump money into the market to keep things propped up. For example, Biden has already expressed interest in giving a credit to first-time home buyers. It's too soon to say how much it could be or if it will happen at all. But regardless, the likelihood of some form of stimulus happening that will further spur housing demand remains very likely. Eventually, there should be some success at creeping upward the general inflation rate throughout the economy, which will devalue the dollar sum and cause the nominal price of housing to continue upward. Albeit, perhaps that's not the real price of housing, but houses will still be selling at a higher dollar value. However, home prices cannot continue to outpace wage increases forever, but in the short term, low rates have made the affordability of housing such that there is still room for a bit more growth. To illustrate, have a look at this table from the National Association of Realtors. This is the Housing Affordability Index. You can see that as recent as September of 2020, housing is more affordable than all of the 3 years prior. Also, still yet, I believe there is a lot more pent-up demand. There are likely a lot of buyers who put off buying a home in 2020 because they wish to wait for 2021. So in short, I don't think you should panic when you hear all of the doom and gloom that some of the folks are spreading around. Stories of impending doom make great headlines, and there will always be someone ready to spin one of these stories up for you when you want one. But if you're thinking about getting into the market and buying a house, I say don't wait. Trying to time the market rarely works out in people's favor. One of the most cliche sayings, but something I really like a lot, is that it's better to buy a house and wait than to wait to buy a house. If you got any value out of this at all, please consider subscribing to the channel so that I can keep bringing you more videos just like this one. And don't forget to annihilate that like button. And until next time, you guys are awesome.